Taxes. Everybody hates taxes. I've yet to have someone come up to me and say, Dave, I really enjoy writing that check to the IRS every year. So we want to reduce taxes and in the next 8 minutes or so, I'm going to teach you some basic principles, some basic fundamentals that may be able to help you reduce your taxes, not just now, but in the years to come. We're going to talk about the 3 tax buckets and tax diversification and what it can do for you. Now, most of the assets you have, the money you earn, will fall into one of 3 tax buckets. The first tax bucket is the tax now bucket. This bucket, you pay taxes on the money as it's earned. The second tax bucket is the tax later bucket. In this bucket, you don't pay tax as you put the money in the bucket without paying tax. You pay tax later when it comes out. Then we come to the third bucket, my own personal favorite. This is the tax-free bucket. Money in this bucket will not be subject to income tax forevermore. So, what's in each of these buckets? Well, the first bucket has things like interest. If you, for instance, have a CD that's paying you 2% a year, every year you're going to pay tax on that 2%. Another thing in this buckets are stocks and mutual funds that you own that are not in an IRA. For instance, if you own a stock or a mutual fund, it may pay you dividends every year. Dividends are, the company you own makes a profit and they pay you some of that profit back to you in a dividend. You pay tax on it that year. If you bought a stock or a mutual fund and it went up in value and you sell it, you have capital gains and you must pay capital gains on that every year. The second bucket, the tax later bucket, what's in that bucket? Well, I'm betting that by now you've guessed that is things like IRAs, individual retirement accounts. That's where you take your wages, don't pay money on it, don't pay income tax on it that year, you put it away and you pay income tax later when you take it out. If you work for a big company, you might have a 401k. If you're a teacher or a nurse, you might have a 403b. If you've worked for the government, you might have a thrift savings plan or a TSP. The third bucket, my personal favorite, I bet you have guessed that in that bucket is a Roth IRA or a Roth 401k. But there's 2 other things in that bucket. One of them is a municipal bond. This is where you lend money to a government agency that's doing something for the public good. It could be a road, a water system, a hospital, a school. Because it's for the public good, you don't pay tax on the income coming from that. But then again, because the income is tax-free, those bonds pay less than, say, a standard corporate bond. And there's a whole other set of criteria used to decide which one to buy. There's a third thing. And that third thing is life insurance. If you take out a life insurance policy on yourself and you die, that money goes to your spouse or to your kids tax-free. Now, why do you want money in all 3 buckets? A couple reasons. One reason is when you get to retirement and you need to start pulling money out of these buckets to live off of, it can be you now have a choice as to which bucket to pull and in order to keep yourself in a lower tax bracket and pay less taxes as you go through. So it's good to have the choice. But there's a second reason. Before that, I want to show you a basic principle on knowing these buckets, how you save money on taxes in the future. And that is, you want to move money in this direction. You want to move money over time up this ladder, ideally getting as much as you can in the tax-free bucket. Now, I bet you many, if not most of you, have already done some of that. For instance, if you were working and you took some of your wages and you put it into an IRA, you moved it up one click. If you were working and you took some of your wages and you put it into a Roth, you moved it up 2 clicks. But you know, a lot of people come to me, they're retired, and they say, well, David, I'm retired, I no longer have any income. And you know, to put new money into these two, the IRA or Roth IRA bucket, to put new money there, you have to have wages, you have to have W-2 income. But if you're retired and you have money in this bucket here, if you have money in an IRA or a 401k, you can do what's called a Roth conversion. You can convert that money to a Roth at any time. You just have to pay the tax going from here to here, and then it'll grow tax-free forevermore. Now, there are some basic rules and principles you need to understand on how to do that. We'll talk about that in later videos, but you know, there's a reason you want to do that. A second reason is, well, you always want to pay taxes at the lowest rate. And right now, taxes by law are lower than they're going to be in the future. If you recall, in 2018, we passed the Tax Cuts and Jobs Act. We lowered the taxes in most brackets for most Americans. But when we lowered the taxes, but we didn't cut back on federal spending. So by law, the taxes have to sunset. These tax breaks have to go away in a few years. And by law, tax rates are going to go back up. Now's a good time to do this conversion when taxes are low. There's a second reason that many of you may be subject to. If, like me, you're married, you're probably filing your taxes married, filing jointly. And but eventually, one of you are going to die. And usually it's us guys. We crap out and the ladies go on for years and years. But when one of you dies, the surviving spouse is now filing as a single taxpayer. And tax rates are much higher for single taxpayers. There's a saying that a widow has half the income and twice the taxes. So it's a good idea to get more money up into this tax-free bucket now while you're both around and can take advantage of the lower tax rates. So when one person dies, the surviving spouse has this tax-free money to draw on. So there's some principles here on taxes and a strategy to reduce your taxes now and into the future. But there's 3 little points I want to make before we leave. Number 1, don't try this at home. This is a general outlook on taxes. We've done some simplifying instructions. It's not meant to be specific tax advice for you. You should talk to a licensed tax person or a licensed financial advisor before you try to do this. Number 2, you might like to have a copy of this board to study. Even better, we have a little report that illustrates the tax buckets in more detail. If you'd like to get a copy of those, what you can do is down below there's a place you can click and just put in your email, and we'll email you these copies. If, in fact, you really don't want anything more in your email inbox, or you don't want to try to study it on a little screen, you can give us your address and we'll mail you a good old-fashioned paper copy as well. And the third thing, you know, I have over the years taught many workshops at UNCW and Brunswick Community College. In fact, we totaled it up in the last 5 years. There's been over 2,400 people registered for our workshops. But the trouble is now with the virus, we can't get people together in a room anymore, at least for a while. But you still need to know this stuff, and that's why I'm doing these little videos, each with an aha moment divided into nice little parts. But when I do a workshop, a lot of people often have questions. They say, during the workshop or afterwards, and it's kind of hard now. What do you do with questions? Well, again, below here, you can click on a link. It will take you to an online calendar, and you can book a 15-minute phone call with me, ask questions, see how this applies to you, kind of do what we might have done in the workshop. So go ahead. There's a link to both get some copies of this and get on our list for the future updates, and to book a quick phone call. Boy, I got lots of other videos coming up. I'm going to show you the 2 major ways to do a Roth conversion, why you might want one over another. We're going to talk about what grows faster, a Roth IRA or a regular IRA, some surprises there. And probably my favorite is how to pay the most in taxes. Yeah, a lot of people, they have an IRA, a 401k, and they tell me, I hate paying taxes. I don't want to give the government any more money than I have to. But what they end up doing actually causes them to pay the most in taxes. So that's another one coming up. So look forward to talking to you in the future. Take care.